Most people think the CFO just handles the money. But walk through a real CFO's day and you'll realize this is one of the most strategically demanding roles in any business. Over the next 45 scenes, we'll walk through a full CFO day. We'll start by debunking the myths, looking at the CFO versus the controller, and then moving through the morning, midday, and afternoon agenda of a modern CFO. The common myth is that the CFO is a pure number cruncher who simply counts money, reviews spreadsheets, or approves budgets. This is the caricature we need to destroy. The reality is that the CFO is the CEO's strategic co-pilot. The role centers around 6 pillars: strategic advisor, risk guardian, capital allocator, performance driver, market communicator, and operations partner. The most misunderstood distinction in finance is the difference between the CFO and the controller. The controller records transactions and looks backward at what happened. The CFO interprets the financial story, advises on strategy, manages risk, and looks forward to what could happen. The CFO reports directly to the CEO, establishing this relationship as the core driver of strategic influence. Under the CFO is a broad team covering core functions like the controller, treasurer, and investor relations. Only 22% of a CFO's time is dedicated to traditional finance operations. The majority is spent on strategic planning, risk management, and stakeholder communications. The modern CFO is primarily a strategic leader. We now move to the morning routine, from 6:30 a.m. to 9 a.m. Before the building fills up, the CFO's day is already in full swing. By 6:30 a.m., a prepared CFO is absorbing a daily briefing. This includes market headlines, overnight financial numbers, alert flags for any performance breaches, and a review of the day's agenda and priority emails, like CEO asks or investor inquiries. The 8 a.m. CEO check-in is arguably the most important 30 minutes of the day. The CFO must be a trusted advisor, aligning on strategic priorities, flagging performance issues, requesting necessary sign-offs, and discussing external threats identified overnight. The CFO has more board exposure than almost any other executive. This relationship defines governance and credibility. The CFO interacts with the full board, audit, compensation, and risk committees, each having distinct financial and strategic oversight. Next, we deep dive into the 6 core domains that every CFO is responsible for mastering. We will look at what happens in each domain on a typical day. Domain 1 is strategic planning. The CFO must understand the financial implications of every strategic choice before the CEO commits. This involves tools like SWOT analysis, competitive intelligence, and determining the optimal cash strategy and growth pacing. Domain 2 is risk management. The CFO's job is to anticipate what could go wrong and have a plan ready. This covers 4 types of risks: strategic, operational, financial, and hazard risk. The process is to identify, quantify, rank, and mitigate. Domain 3 is the control environment. Controls are the immune system of the business, not just bureaucracy. The CFO ensures a balance of preventative controls like segregation of duties, detective controls like internal audits, and corrective controls such as remediation plans. Domain 4 is performance measurement. The CFO tracks and owns key metrics like revenue growth, free cash flow, EBITDA margin, and return on invested capital. These metrics form the backbone of the performance dashboard. Domain 5 is capital allocation. As the saying goes, every dollar invested is a vote on the future. Priorities include organic investment, M&A, debt repayment, dividends, share buybacks, and maintaining a cash reserve. Discipline is key here. Domain 6 is stakeholder communication. The CFO speaks to more constituencies than any other executive, acting as the primary translator of financial performance to the board, investors, banks, the executive team, and rating agencies. We move into the midday session, finance leadership, from 9 a.m. to 1 p.m. This is where finance operations live, focusing on budgeting, deep dives, and the monthly close. The budgeting and forecasting engine is the CFO's biggest recurring responsibility. This includes managing the annual budget and rolling forecasts, challenging assumptions, performing scenario analysis, and connecting budgets tightly to strategy. Cash is king, and the CFO is its guardian. Cash management involves daily position review, cash pooling, optimizing working capital for trapped cash, detailed forecasting, and managing banking relationships and foreign exchange exposure. Pricing strategy is the highest leverage profit driver. Even a small price increase can drastically improve operating profit. The CFO must assess different approaches, from cost-plus to value-based or dynamic pricing models. Capital budgeting is where the CFO evaluates investments. They set the methodology, requiring all projects to be evaluated using methods like net present value and internal rate of return, always measuring against the weighted average cost of capital. Now we enter the afternoon session, Strategy and Risk, from 1 p.m. to 5 p.m. This is dedicated to M&A, investor prep, risk reviews, and decisions that shape the company's next few years. The CFO leads the financial side of mergers and acquisitions. This process involves strategic screening, due diligence, valuation using various models, price negotiation, and finally integration to capture synergies. When equity is too expensive or unavailable, the CFO turns to debt markets. They must understand the full debt toolkit, choosing the right instruments like revolving credit, term loans, or high-yield bonds, and managing interest rate risk through swaps. For raising equity capital, the CFO is involved in every transaction, from angel and venture capital rounds to private equity and initial public offerings. They navigate the complexities of deal structure and dilution at every stage. Foreign exchange risk can severely impact earnings. The CFO must manage exposure in 3 areas: transactional, translation, and economic exposure, using hedging instruments like forward contracts and currency options to protect the business. As the market spokesperson, the CFO handles investor relations. Regulation FD requires careful communication during earnings calls, roadshows, and guidance management. The CFO must maintain credibility and manage the credit story with rating agencies. An IPO is the CFO's biggest project. It requires an 18 to 24-month runway to upgrade the finance team, implement controls, select underwriters, draft the S1, conduct the roadshow, and manage post-IPO reporting. Public company CFOs adhere to a strict regulatory filing calendar. Key filings include the annual Form 10-K, the quarterly Form 10-Q, the current report Form 8-K for material events, and the annual proxy statement, or DEF 14A. Missing a deadline is not an option. Technology investment is a major high-stakes decision for the CFO. This mandate covers ERP and FP&A systems, treasury tools, ensuring robust cybersecurity, investing in AI and automation for finance tasks, and maintaining data governance and quality. The day often ends with external stakeholders from 5 p.m. to 7 p.m. This period includes lender calls, essential board preparation, and continuous investor relations activities. The CFO's external responsibilities frequently extend past standard business hours. Managing credit rating agencies like Moody's, S&P, and Fitch is vital, as the rating determines the cost of debt. Investment grade status is BBB or above. An upgrade can significantly reduce borrowing costs, so proactive engagement is essential. For public companies, the CFO actively manages share and stock matters. This requires optimizing the capital structure, which is an ongoing fiduciary responsibility. Next, let's explore what makes a truly great CFO: the skills, mindset, and behaviors that separate a good finance executive from an exceptional strategic partner. Technical competencies are foundational. These include financial modeling, deep knowledge of GAAP, IFRS, treasury management, tax strategy, capital markets expertise, risk frameworks, data analytics, and regulatory compliance. What truly differentiates great CFOs are soft skills: storytelling to translate numbers into narratives, strategic courage to challenge bad decisions, talent development, cross-functional partnering, ethical clarity, and mastering communication for varied audiences. The CFO is the risk guardian. As the CFO Guidebook notes, mastering risk allows the company to find opportunities that competitors deem too risky. Key actions include maintaining deep business knowledge, committing to strong controls, setting activity boundaries, and establishing reasonable targets. This schedule visualizes the breadth of a full CFO day, from an early morning market scan and CEO sync to midday budget and M&A reviews, concluding with investor relations and evening reading of analyst reports. Let's debunk 5 biggest CFO misconceptions. The CFO does not just approve the budget. They redesign the process. They are not merely risk-averse. They enable growth through risk intelligence. Accounting is only about 20% of their job. They must understand technology. Finally, they report directly to the audit committee, not just through the CEO. CFOs are judged on 5 key metrics: financial results like growth and margin, capital efficiency, investor confidence, risk track record, and their strategic impact beyond the P&L. Results are necessary, but not sufficient for success. Now, let's establish your CFO action plan, regardless of where you are in your finance career. Here are 3 concrete, immediate moves to increase your impact this week. First, map your CFO readiness by scoring yourself 1 to 5 in the 6 core domains. Second, audit one risk you've been ignoring by quantifying it and creating a 1-page response plan to send to your CEO. Third, schedule a strategic conversation with your CEO or board to align on future decisions. The CFO is not merely an accountant with a title. They are a strategic co-pilot, a risk guardian, a capital allocator, and the voice of financial integrity across every stakeholder relationship. Thank you for watching. Follow for all 200 videos in this series.